What is going on, everyone? It's your boy Tony on the charts, just touching base, looking at BTC from where we took off last week on the weekly update. So last week we had the short in place, which is currently moving in profit. So let's take a look back at where we are and what we can expect over the coming week. So currently looking at Bitcoin on the 1-day chart. We're currently moving with, if we bring our monthly levels, even our weekly levels, and even our daily levels, we still have 3 layers of resistance above us at the moment. And to be honest, daily levels aren't exactly the strongest forms of support, so we're not really seeing support until we start getting down to the 19k area. Now, if we just move away from those for a second and we look at a bit of the traditional technical analysis, looking at the patterns, we know that from a larger point of view, we've broken out of that big downward channel, that's from the all-time high that we hit. And once we broke out of that, we retested it, pulled away, but arguably there is this upward rising channel which we've broken to the downside, so expectation of a bit of a pullback there. Now, if we look at from an Elliott Wave point of view on the weekly, this was the kind of what we were hypothesizing last week, which is still in play because the invalidation point is at that kind of 15449 level. But what was interesting about the breakout out of that channel was the fact that it was kind of this impulse wave count 1, 2, 3, 4, 5, suggesting that this is on the larger primary count, the one coming into a 2, and this 2 could be coming as far away as down to this number before taking off into the 3 at a much larger count, which is obviously bullish overall. Looking further into, if we look at the kind of the visible profile range, because I'm still in the short, and this is going to be kind of somewhat justifying that short at the moment. And I guess what's interesting is if we look at the visible range volume profile, we kind of currently, even though the point of control, i.e. the kind of peak volume of all the trading in across this time span is down at this level, really we've got twin peaks. We've got this other kind of head, this other area of congregated volume, which will be interesting for us to think about when we're talking about the expectations of this pullback and the question of how far that can go and what available forms of resistance that we have. So when we just kind of think about this, I'll turn off that, but we'll keep that kind of level and turn on, while we're talking about fib retracements, with this kind of wave 1, we've got that point of control, that second point of control almost right there in the golden pocket, because we typically expect, although it's not a rule in itself, it's not an absolute, but we expect a wave 2 to kind of correct at least something of the 50%, if not, that golden pocket, but it can easily be, coming to the 78.6% level as well. But it's interesting that we're getting the confluence and the doubling up in that area. Because when we start looking at the lower time frames, let's go into the lower count to justify this. Here we can see what we spoke about previously, the 1, 2, 3, 4, 5. Correction ABC 1, 2, 3, 4, 5 up to this point, and then if I'll even go into the 4-hour chart. There's the 1, 2, 3, 4, 5, and this was the ABC that we plotted hypothetically at the time. This hadn't played out, and then now if we were to just go into what I've got, even going into the minute count of this Elliott wave. Here we've got and this is what we were expecting. The ABC is a 5, 3, 5 count if it is going to be in this formation. So here's a 1, 2, 3, 4, 5 A, B, C, and then not sure what kind of happened in the Asian markets, but we've got this massive red wick to the downside. That was that plays into this narrative of the 3 with a pullback to the 4, which we'll talk about in a second, and then the question of where this 5 goes. And the only way we'll know if this kind of fully completes is depending if we get the kind of 5 impulsive waves out as the beginning of the wave 3 and the conclusion of this wave 2, because obviously we could get a complex correction where there's essentially a double zigzag, a double ABC, which could take us down to this level of the kind of like the 19k region. So if we just kind of let's go further down, let's search for further areas of kind of confluence. So if I'm just going to bring the RSI into the mix as a kind of a momentum indicator, let's look at that in terms of, sideways lower lows, but actually prices moving to the lows, suggesting maybe we can get a little bit of relief for the apex of that wave 4. Because if we go on to the daily, we have the kind of the larger kind of divergence of price, the higher lows of that price versus, I'll just draw a new one there, the kind of the lower lows on the RSI versus the higher lows on the price. So we're expecting price to kind of follow on the daily time frame versus the 4-hour time frame, and that kind of divergence of a slight relief and then the kind of the further fallback. And that all kind of plays into essentially this trade at the moment. This was our point of entry. This was the kind of stop loss, and that, I mean, it's just pure coincidence that's right there, the confluence of obviously that alternative point of control and obviously that golden pocket. And at least that will be the kind of position until we get that alternative count and that kind of volume that suggests a reversal is taking place in the meantime. Because just to touch base on, let's get the VPPV. Here we go. I mean, again, on the long term, we're looking to be breaking that 25k, and when we do, it'd be really interesting to see how quickly, hence why a lot of people are just calling for predictions of 30k in March. How quickly can we cut through this? Because there's such low volume, we're going to cut through it like butter if we can get there. So like and subscribe, guys, if you're interested in just keeping in touch. Please follow, and we'll be giving those weekly updates. So let's see where this goes. Until next time, but ciao.